Hey, what's going on, everybody? It's Xavier here with Doxa Financial Wealth Group, and today I'm going to dive back into how I would do options. I do like swing trading and mostly selling puts and covered calls. I understand that not everybody out there has a sizable portfolio above 25K where you can day trade and kind of get a little bit more for a way of doing options, in my opinion. So as you see, this is my account. This is the past month for me trading options. Just so you know, I'm not. It's not like a one-time thing kind of deal. You know how you see those crypto guys like making 20K in a couple days and then they lose it all. Like this is all consistent income that I do day to day. It's my full-time job. I was in the Navy. Got medically retired. Now I do this full time. I've been doing stocks since I was 18 years old. And I have a degree in I have a bachelor's of science in business analytics. So I do enjoy analyzing business, for lack of a better term. So today we're going to talk about what a put credit spread is, and I would do it. It was up to me. So first off, you gotta have a brokerage. I use Robinhood. Whatever brokerage you use doesn't matter, but I'm going to show you how I do it on Robinhood because that's what I use. Now you can use Robinhood, you can use Tasty Trade, you can use Schwab, whoever you want to use. But pretty much what I do is I research a company. Now you can research a company many different ways. You can go to ChatGPT. You can ask it to tell you like deep research. Can you tell? So you can use AI to do this. You can also go like whenever they have earnings and look at their list of what they have going well, what they don't have going well, etc. So it just depends what you know, what you're comfortable with, what you like doing. Let's see. One. And then we'll kind of come back. So as you can see, I have some positions up. Look, some of them are losing. You know, it happens like that. Video just opened down, so it's down, and this is soon. But the cool thing about selling options is that this put right here, if Nvidia drops below 128, I'll just buy the stock for that price. If it expires, let's say at $128.01, I don't buy Nvidia, and then I get to keep my premium of $1,144. Let's say it expires at 128 or anything under there. I will keep this $1,144, which brings my average cost of the stock itself to 125. So if it expires, just under 128 and it doesn't even hit this number, I'm still winning this trade. You know, that's actually the great thing about selling options is you're gonna buy a stock that you actually do like at a cheaper price, or you're not gonna get assigned and you're gonna collect the premium anyways. So it's just passive income. You can do it weekly, monthly. You can do it something called leaps. You can do, I like the Tasty Trade methodology of 45 days till expiration. And then you trade around day 21 with a delta of like 20 to 30. So I'll show you kind of how that works. We'll go here. We'll just do NVIDIA for now. Friday. These are what the contracts are trading for. But this is the price of the contract. So each contract is 100 shares of Nvidia at the price is the strike price. The break even is this minus this equals this because each contract is 100 shares and you times that by 100 and then you subtract it from that. So that's how you get that. Chance of profit, that's just the chance of it going in your favor. Percentage change, that's the amount of it's changed. It was created. Change. Yep. There you go. All right. So, what I would do if I was selling like a credit spread, like say I had under 25K, I would just set up a whole bunch of these. So, a credit spread, you're selling a put, buying it back, and instead of having unlimited risk, quote unquote, you're having what's called a defined risk. So, let's go to a strike price with a delta. The delta is the Greeks. Pretty much the delta and the theta is the only thing we care about selling options. Delta is the probability of the stock going in your favor. So delta, low delta means higher chance, as you can correlate those two things. And then theta is the amount that the option gets eaten away in premium price. So the theta right there is $8. So every day, $8. It's gonna go down $8 every day, no matter where the stock's at. And why is that important? Because you want the premium to get cheaper so that you can buy it back for a net gain. Now, you don't even have to do that. You can just let it expire worthless and then win 100%. But I recommend buying it back around 50%. Or if it's like the next day, you can buy it back at like 25% and get a pretty nice profit. So, this is how you do a put credit spread: sell a put, then you buy a put. I usually do about a $5 spread. That's where you're going to get the most bang for your buck. And you never want more than 3-1. So this is about a 4-1. So obviously that wouldn't be the best trade. But that's how you do it. Go here, continue. Like 5 contracts. So this is more of a defined risk. And then the bid ask spread's about 10 cents apart. So I just try to go in the middle somewhere. And then this is how much you make. This is how much you would lose if you did this trade and it didn't go in your favor. So if it literally just has to stay above 120, which I'm bullish on the stock market. So if it stays above 120, I think it's very, very likely that it's going to do that. Um, that's just how you do the credit spread. It's super duper simple, nothing crazy. Something I actually like to look at is these charts right here. So Nvidia right now, see how it's going like super duper low, and the RSI's tanking down a whole bunch. That's actually really good. That means this is a great time to get in because it's being oversold and it's going to correct and go back up. So actually, this is what I'm going to do. Just since I'm a betting man, I'm actually going to go 23rd. Sell put 87 break even. I don't really like that. Have to do something. go. Mind you, these are all like right now, so don't copy this if you were thinking about it, because these option contracts change like daily. All right, so we'll go. Let's see what this is. 36 delta. 36 is like the max delta I would ever go because it's 65% chance that you're gonna. I know this has that there, but you want to look at the Greeks. So we'll go here just because it's a credit score. And you can lose all of this. All right, that's a good one. That's yeah, that's a good one. Do that. It's still going down. We'll go here. We'll go. So this is for next week. It's actually really good. It's under 2.5 to 1. So this would be a good trade to do. So this is defined risk. And just like that, it's filled. And it should start going back up. Pretty much what I wanted to do is just stay above 127 before next Friday. But what could happen is it keeps going below, and I have to lose all my money, or I could buy it back at a cheaper price. As you can see, this simulates a return. So as Nvidia goes up in price, this is tomorrow, the next day. But the max you can make is $710. That's the max you can make. Unlike buying options, you can buy an option and then it's unlimited the amount that you can make. But I don't really care about, the FOMO and making, $10,000 in a day and then I lose 15 over the next month or two. Like I'm not interested in doing that. I'm interested in making consistent income month over month, year over year. Like and look, we'll go the opposite. Remember 127, 122. Like 127, and this is just to prove a point. Max profit, you're still gonna get that. We started at like right there. Like it's really that simple. I think most people just don't understand, or they just don't have the money to. And if you want to just buy stocks, this is actually a really good way to do it. Because if you just sell a put, you're saying, okay, I'm going to buy this stock for that price. Whatever you want, like you can do that on. I know Palantir was going. This is what I do every day. It doesn't take a lot of time. Like you can have a full time job and do this, and it's pretty simple. So right now we'll go to Palantir. Their options. So do that one still. Not really feeling that one. You know. Just not feeling it. Like if you're not feeling it, just don't do it. And you got to stick to your principles. We want to make money. We don't want to lose money. We want to be like these silly option buyers. Unless you're buying leaps, let it do its job. Because it's going to overcorrect. Let's see if Nvidia already did. Still down, but it's rising. Yeah, this is kind of how I use ChatGPT. I don't just go to it for straight information, but if I want to do a little bit of a quick analysis, it'll tell you overall like what's gonna happen. So, and then even in here, you can like if you don't understand something further, you can have like a running note sheet. Something I like to use, especially in Cortex. This is a writing app that Dan Co made, and it's kind of like Notion, but way better in my opinion. So, Dan, you see this? Hit me with that sponsor, dog. Anyways, I'll put notes in there with their capture feature, and then go through some stuff if I don't fully understand what it's talking about. You know, just try to give you a sense of what you can do, what's worked for me. I mean, everybody starts from a place of like I have no idea what a stock is, and like, how is a video worth $10, or how's it worth, whatever it's worth, and people just don't really understand the stock and the company and all that jazz. But it's fairly simple in the long term. It just sell put options. Then when you get assigned, sell cover calls to collect premium above what you bought the stock for. It's that simple. And I thank you guys for watching. I'm going to continue putting these videos out weekly. I want to try to do 2 a week and just continue to help others unlock financial freedom and put God first. So that all of this is just based off my faith in Jesus and putting him above everything, and using my wealth to give back and help others achieve their own financial goals. Right. So thanks you guys. Like, comment, subscribe, and I'll see you on the next one.